Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what in the hell is happening. Yeah, if you enjoyed the video, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And my membership section on YouTube is of course live. If interested, the link is below, $3 a month, where I share intraday thoughts on Tesla as it is moving throughout the day. But with that being said, let's just jump right into it. So first thing I want to actually mention that I just told my members about not long ago is going to be this, right? We are entering essentially an extreme fear in the market, right? That's what we're entering right now. We're in extreme fear. This is, actually, we're almost in extreme fear. We're pretty much teetering on it, right? But this is kind of like this, I think CNN or CNBC, fear and greed index, where essentially it just shows just how much fear is there in the market. Another way to calculate fear usually-ish is going to be the VIX, right? The VIX is a pretty good calculator of that as well, which at the moment, like we talked about, it's looking pretty strong, which is a little bit concerning, right? That's the main thing that's concerning me right now about the market, right? There's a few things that I'm happy and I'm honestly kind of bullish on. It's definitely not the VIX though. This is the one thing that's keeping me kind of in check, if that makes sense, because this thing, if this runs even further, which it looks like it wants to, it's probably not good. It's probably not very good for the market itself. So, but with that being said, we're in this little situation here where we're pretty much in extreme fear. And usually the way this thing works is, you know, it teeters back and forth between the two, right? Usually it goes from like extreme fear all the way to greed / extreme greed every like half a year or something like that, give or take. Like every few months, it always fluctuates between the two. That's just how the market works, right? That's usually how things always work, right? And there's a saying, right, where you buy fear and you sell greed. Well, this is kind of that situation. Now, obviously, this isn't that simple, or else everyone will just wait till it gets here. They're just all in and then they just sell here. You know, it's not that simple, because at the end of the day, the best way to say this is this: just because the stock fell 99% doesn't mean it cannot fall another 99%. This is kind of the similar concept here, where just because we're in fear or even extreme fear, it doesn't mean that we can't not only obviously go substantially lower, but stay in fear or extreme fear for an extended period of time. So that's why it's not always just that simple, like, oh, just wait for extreme fear and buy, and then just sell at extreme greed and you're rich, and just rinse and repeat for the rest of your life and you're literally well off. So keep that in mind, right? Keep things in check, right? Keep things realistic here. But nonetheless, usually still in theory, over a long period of time, extreme fear is in theory a good time to usually buy. Just thought I'd mention that very quickly. Now, moving back to Tesla itself, we closed at 205 roughly per share, which is going to 205 and a half per share, which is about a 3.2% decrease, which compared to the market is roughly in line, right? We were actually outperforming the market for a decent amount of time today, but unfortunately we ended up catching up to it, and we ended up pretty much performing in line with QQQ. QQQ is definitely finding some issues though. This thing is getting sold off extremely aggressively. This is a pretty severe sell-off for tech in general. Tesla's of course part of that. But on the bright side, we are essentially at the bottom of what could be a very large bull flag for the QQQ. Even on the weekly, it looks a little bit more obvious here. You can see we are essentially at the bottom channel, right? 1 touch point, 2, 3, 4. We're on the 4th touch point as well. So take that for what it's worth. This is a pretty pivotal moment right here for the indices. So take that for what it's worth. Now, if we, of course, fall down to the downside, that's going to be pretty bad. Very, very bad for tech itself as well. And we'll probably be making our way to 310, which is the 200-day moving average, which Tesla, of course, will get impacted by that, what's guaranteed. Now, with that being said, Tesla is in its own little bull flag. We talked about that, where you can argue that fact that this run up from 100 all the way up to almost 300, which is a phenomenal run, is essentially that little, run that we set up the pole for the bull flag. And now we're, of course, doing the correction. We're essentially correcting this massive rally from all the way over here to all the way over here, 100 to 300. Now we're correcting it. We're cooling off. We're building up steam for the next momentum, which I personally think is what's happening right now. This can, of course, get uglier, but that's the way I look at it. And that's usually what a bull flag, the flag part of the bull flag, which is this situation, this little downward channel that we find ourselves in, represents. It represents a cool off, a correction, almost like a reaccumulation, right? To get fresh investors, traders, etc., to re-enter at now corrected prices, and that fuels the next momentum, right? Eventually, you kind of rise it all up. So that's the situation I think we're finding ourselves in. With that being said, that doesn't mean that we cannot go lower, because as you can see, this bull flag, we actually haven't done the 4th touch point at the bottom here, like the QQQ is, where it's now at the bottom of the bull flag. So with that being said, Tesla can still technically go lower. In my opinion, close to around the 180s. Somewhere around the 180s will be that touch point, and that's where I think Tesla can, in theory, hopefully base. Beautiful bounce, and I think we'll have a phenomenal end of the year rally, and honestly, potentially even pretty damn good first half of 2024 or so. That's the way I'm looking at it right now. Now, We also have, of course, the 200-day moving average, which we are closing ever so slightly below it, but it's so close to the point where you can argue the fact that we're pretty much closing at it, right? It's not too crazy. The week hasn't closed yet. We still have a day tomorrow, so keep that in mind. But you know, it's a little bit concerning, but it's not too bad because we're still in an overall massive area of demand, which is this, of course, massive green bar that, of course, in past has acted as a support and as resistance many times. It's a very strong one. 200 is a psychological level, so take that also, ladies and gentlemen, for what it's worth, right? By the way, Amazon reported pretty decent earnings and it's up, so hopefully that can help the market as well. So we'll see if that actually helps or not. Let's go back to the daily, right? The daily is showing a few things here as well. So we're still closing below the 200-day moving average. We're making lower lows on the actual chart, right? We're closing candles lower than we ever have closed in a while, right? Especially in this little recent trend. But if I zoom in, you can see the RSI is kind of around the same level. It's not really going lower. It's not really making a bullish divergence anymore. It was, but it's not now because we ended up closing near the lows of the day, but it's not actually really going lower just yet, which is an okay sign. It's a very mediocre sign, but it's at least something to look forward to. However, on the 65-minute chart, you can see as we're actually making lower lows and essentially closing candles at lower prices than we did back here, the RSI is making very obvious higher lows, which to me is a nice little sign of a bullish divergence. So that's a good sign to see. I like that. That to me tells me that maybe there's a little bit more pain ahead. Maybe we actually come down to about 200, maybe even ever so slightly slip below, trigger some stop losses, and then recover. People panic sell, and then we recover back above 200, and then we get our bit of a run that I talked about. That's a possibility, but this to me is signaling the fact that we're looking to try to base around this area. Obviously, just because we're showing a bullish divergence, it doesn't mean it's the end all be all. Just because it's here doesn't mean this has to base here. Absolutely not. But it is showing signs of wanting to base. It's just a matter of will it actually happen? Again, the easiest way to look at this is as follows. If you don't want to overcomplicate things, if you want to just look at this in the most basic, simple way possible, but still, in my opinion, effective, it's this. For further upside, you want to overall unlock 220. If we break above 220, we'll come up to the 21 EMA, which is going to be around the 230s. If we break above that, we'll come up to the 240s and actually retest this overall breakdown of this massive channel. That's the upside potential. And ideally, we want to start closing above 210 and the 200-day moving average, which is 215. The downside. What's the downside, right? And don't forget, each of those unlocks the next level. That's usually how it works, right? You can see we unlocked the next level to 220 over here many times. We couldn't close above it. We kept getting rejected and we couldn't make our way further above. For instance, if we started closing candles above 220, I guarantee we would have came up to the 21 EMA at least. So take that into consideration as well. On the flip side, if we start closing below 200, especially closing, not necessarily going below intraday, but especially closing candles, especially in several days in a row, below 200, that is where we start unlocking the potential to go to the 180s, which I think we will. And I think that's where we get our fourth touch point on the bull flag. I think that should be in theory fine as long as it happens fairly quickly and we recapture 200 ideally as quick as possible. But that's kind of the main thing I'm looking at, right? Taking a quick look at options flow as well. Let's take a peek over here, see what's happening, right? You can see we still have a decent put, a fresh one that came out today, I believe. 1.1 million in premium, 170 puts expiring September 2025. So it's well ways away. It's extremely far away, several years out, but nonetheless, it is a decently sized put. 1 million is a lot, but it's not like a crazy whale, like a 3, 4, 5 million put, but still something worth noting. And you can see a lot of little red dots everywhere signaling that people are, you know, nothing crazy. They're overall fairly small relative to, you know, something worth really paying attention to, but some bullishness on the short term, some bearishness on the slightly longer term. So we'll see how that plays out, but take that for what it's worth as well. But that's kind of the main things I'm personally looking at. I think most of the other indicators aren't that useful. We have the 100-day moving average well above us. We have the 50-day moving average well above us. So no reason to talk about those until we break above the 21 EMA. That's kind of how I'm looking at that right now. The squeeze, of course, already played out to the downside, right? That was that move from the from earnings. We talked about that. A big move is coming. It happened, of course. We have the volume profile, which, you know, in here is showing us some low volume, but you can see once we get to the 180s, it spikes again. Keep that in mind, right? So, you know, take that for what it's worth. On the weekly, we take a look at it as well. You can see a lot of volume here. And we still have decent volume around the 190s and even 180s, but below that, it starts getting a little bit lower, which is why we fell here so aggressively once we snap these higher volume areas. So take that for what it's worth as well. But that's kind of the main thing I'm looking at, right? Overall, the market looks like it's trying to base. QQQ is looking like it wants to ideally bounce off of this area right here with the 200-day moving average not too far below us on the daily as well. And hopefully QQQ can find a bid here and we can get a bounce, because that is the most ideal situation. And that should help Tesla run up and hopefully come up for that retest for that end of year rally. If it doesn't, then it looks like we're coming down to 180s first if we break 200. And then I think we'll have our end of year rally regardless, and hopefully a nice 2024, assuming we recapture 200 relatively quickly. That's the way I'm looking at it. That's how I'm seeing it. Hopefully you enjoyed. Also, don't forget seasonality, important thing to look at, right? Again, October, one of the worst months. We've talked about September, October being the worst months. September was pretty flat. October so far has been pretty ugly. November is one of the best months. Take that for what it's worth, guys. Very important. So all that being said, thanks for watching. If you enjoyed, don't forget to hit that like button, and I'll see you tomorrow. Peace.